The Farmland Preservation Tax Credit is a refundable income tax credit available to Wisconsin landowners. There are different ways to claim the credit depending on how land is enrolled in the program. This short tutorial explains which tax schedule to use when claiming the credit, which eligibility requirements must be met in order to claim, and what documents to attach when filing.
The Farmland Preservation Program is made up of 4 basic components. First, the Farmland Preservation Plan. Second, Farmland Preservation Zoning. Third, Agricultural Enterprise Areas. And lastly, Farmland Preservation Agreements. Individuals who own land in a certified farmland preservation zoning district or own land covered by an effective farmland preservation agreement may be eligible for an income tax credit. To claim the credit, claimants will need to file either Tax Form FC or FCA. For more information on any pieces of the program, please visit our website at farmlandpreservation.wi.gov.
If a landowner has land covered by a farmland preservation agreement entered into before July 1st, 2009, then that landowner should use Tax Schedule FC. This includes agreements that were submitted to the county clerk between January 1st of 2008 and June 30th of 2009, but may not have been signed until after July 1st, 2009. Fewer landowners should be using this tax form each year. Landowners using Tax Schedule FC do not need to attach a certificate of compliance to their tax forms. To verify that you should be using Tax Schedule FC to file a claim for the Farmland Preservation Tax Credit, you should ask for a copy of the agreement. You should check the agreement's expiration to make sure the claim is not being based on an expired agreement. If you need help determining what kind of agreement applies to your client's farm, please contact DATCAP using the information at the end of this presentation.
Most landowners should use Tax Schedule FCA to claim the Farmland Preservation Tax Credit. This includes landowners who entered into or modified an effective farmland preservation agreement after July 1st, 2009, or landowners with land covered by a certified farmland preservation zoning ordinance, or both. Landowners using Tax Schedule FCA need to get a certificate of compliance from the County Land Conservation Office in the county where their farm is located. The certificate of compliance certifies that the landowner's land is in compliance with state soil and water conservation standards. Tax Schedule FCA will ask for the landowner's unique certificate of compliance number, which can be found at the top of the certificate of compliance form.
Since 2009, the only areas in the state where landowners can sign a farmland preservation agreement is within the state's 37 agricultural enterprise areas, or AEAs. Landowners and local governments work together to petition the state for an AEA designation. AEAs by themselves do not put any additional restrictions on land use, but rather serve to meet the area's farmland preservation and agricultural economic development goals. Once an AEA receives designation, it opens the door for landowners to sign farmland preservation agreements.
This is an example of a cover page for a farmland preservation agreement signed after July 1st, 2009 in one of the state's agricultural enterprise areas. Individuals who own land subject to this type of farmland preservation agreement should use Tax Schedule FCA to claim the credit. You may be working with a client who purchased land subject to an existing farmland preservation agreement. They will need to obtain a copy of the original agreement to claim the credit. Landowners should be notified of an existing agreement during a title search, but if they are unsure if their land is covered by an agreement, they can call DATCAP for more information.
If you work with clients that own farmland in an agricultural enterprise area, it might also be important to discuss the benefits of participating in the program by signing a farmland preservation agreement. If your client already claims the credit because their land is located in a certified zoning jurisdiction, they can increase their credit by signing an agreement. Individuals who are planning on staying in farming for the foreseeable future may benefit from signing an agreement as well.
The second avenue, outside of farmland preservation agreements for landowners to claim the farmland preservation tax credit, is owning land within a certified farmland preservation zoning district. Farmland preservation zoning is a tool that local governments can use to implement agricultural protection goals. It functions like a general zoning district, but limits allowable uses to those identified by statute as being agricultural or compatible with agriculture. If your client is trying to find out whether land is covered by a certified farmland preservation zoning ordinance, first check DATCAP's website for a list of zoning jurisdictions with certified farmland preservation zoning ordinances. If the list includes the town, city, or village where the land is located, call the zoning authority for that town, city, or village to make sure the land in question is covered by the certified zoning district.
The map on the left portrays land located in the state's agricultural enterprise areas.
The map on the right portrays cities, towns, and villages with certified farmland preservation zoning.
If you work with clients who own agricultural land in these areas, it might be important to discuss the benefits of participating in the Farmland Preservation Program. Please do not hesitate to contact DATCAP for more information.
Landowners cannot claim the farmland preservation tax credit on the same land using both Schedules FC and FCA. If land is subject to an unmodified pre-July 1, 2009 farmland preservation agreement and located in a farmland preservation zoning district, the landowner must choose between tax schedules FC and FCA. A landowner may also consider modifying the terms of an effective farmland preservation agreement signed before July 1, 2009 with the state in order to claim the per acre tax credit for land subject to both an effective farmland preservation agreement and farmland preservation zoning. This is in opposition to the formula for Tax Schedule FC, which calculates credit based on income and property tax burden. In a case where a landowner has an effective modified farmland preservation agreement and certified farmland preservation zoning, they can claim at a rate of $10 per acre provided they meet all of the applicable eligibility requirements. For more information on modifying a farmland preservation agreement, please visit our website.
This is an example of a cover page for a farmland preservation agreement modified after July 1, 2009. Individuals who own land subject to this type of farmland preservation agreement need to use Tax Schedule FCA to claim the credit. A modified farmland preservation agreement is an agreement in which the landowner has requested to modify the terms of their agreement signed before July 1, 2009 to meet updated conservation standards. In return for modifying, landowners with this type of agreement are eligible to claim the per acre credit on FCA as opposed to claiming on FC, where the formula is dependent on property taxes paid and income of the claimant. If you are unsure which type of agreement you or your client has, please contact DATCAP.
Every year, the number of individuals claiming under Tax Form FC declines. Those landowners with agreements signed before July 1, 2009 that are still effective are encouraged to modify for a number of reasons. First, the credit for landowners with modified agreements is not based on owner income, but rather on a set per acre amount based on a tiered system of participation. Second, landowners with lands enrolled in MFL may claim on the same lands on Tax Schedule FCA because managed forest is considered an agricultural use under FCA. Landowners claiming on Schedule FC may not claim on lands covered under MFL. Lastly, landowners who own lands covered by a modified agreement and located in a farmland preservation zoning district may claim on a single tax schedule at the $10 per acre rate until the agreement expires.
Let's recap. Which tax schedule should you file on? The only landowners eligible to claim under Tax Schedule FC are those who own land subject to an effective farmland preservation agreement signed before July 1, 2009. Landowners who can claim on Tax Schedule FCA include the following. First, landowners who own land subject to an effective farmland preservation agreement signed or modified after July 1, 2009. Second, landowners who own lands located within a certified farmland preservation zoning district. And lastly, landowners who own lands subject to an effective farmland preservation agreement signed or modified after July 1st, 2009, and who are also located within a certified farmland preservation zoning district. If you are still unsure of which tax schedule to use, please call or email a staff member in the Farmland Preservation Program for assistance.
Outside of owning land in an eligible area, the following requirements must be met to claim the Farmland Preservation Tax Credit under Schedules FC or FCA. 1. The landowner must have been the owner of the farmland for the year in which the credit is claimed. The landowner need not be the farm operator and may rent the land to a farmer. 2. The landowner must have been a resident of Wisconsin for the entire taxable year. 3. The landowner may not have claimed the homestead credit or veterans and surviving spouses property tax credit for the applicable tax year. 4. The farm must meet state soil and water conservation standards. To learn more about the requirements that apply to a particular farm, contact the County Land Conservation Department in the county where the land is located. 5. The land must have produced $6,000 in gross farm revenue in the preceding year or $18,000 in gross farm revenue during the preceding 3 years. If a landowner rents the farmland, the landowner may claim on the land provided the renter meets the gross farm revenue requirement.
Again, in order to be eligible to claim the Farmland Preservation Tax Credit on either schedule, the land needs to have produced $6,000 in gross farm revenue in the preceding year or $18,000 in gross farm revenue during the preceding 3 years. Gross farm revenue means gross receipts from agricultural use of a farm, excluding rent receipts, less the cost or other basis of livestock or other agricultural items purchased for resale which are sold or otherwise disposed of during the taxable year. Rent does not count towards gross farm revenue. If land is rented for agricultural use, the renter's farm operation must produce the required gross farm revenue for the landowner to claim the credit.
For more information on the soil and water conservation standards that apply to your client's farm, contact the County Land Conservation Department in the county where the farm is located.
If you have determined that Schedule FC is the appropriate schedule to file, there are a few details specific to this claim that should be remembered. 1. Land enrolled in the Managed Forest Program is not eligible for the Farmland Preservation Tax Credit. 2. The claim must be based on at least 35 acres of land. 3. If at least 35 acres of farmland were enrolled in the Conservation Reserve Program or CRP, the landowner does not need to meet the gross farm revenue requirement. 4. The property taxes for the property and for the year on which the claim is based must have been paid in full. The tax bill should be attached to the claim. 5. Landowners who previously claimed using Schedule FC may modify their old farmland preservation agreement to take advantage of increased tax credits under Tax Schedule FCA. An agreement cannot be modified to extend the expiration date.
This is a look at the first page of Schedule FC. You should only file using FC if the claim is based on an agreement signed before July 1st, 2009 that has not been modified. Important questions include: Number 2, have you been notified that you are in non-compliance with any soil and water conservation plan or standard? If the farm is out of compliance with state soil and water conservation standards at the time the claim is filed, the landowner is not eligible to claim the Farmland Preservation Tax Credit on Schedule FC. Number 7, if the farm was used by someone else who met the requirement in question 5, what is that person's name and address? If you rented the farm and are using the revenue the renter produced to claim the Farmland Preservation Tax Credit, you must list their name and address.
If you have determined and said that Schedule FCA is the correct schedule to file, please keep in mind the following. 1. Managed forest land is considered an agricultural use, and land enrolled in that program may be included in a farmland preservation tax claim. 2. There is no minimum acreage requirement for claiming under FCA. 3. The landowner must have paid or be responsible for paying the property taxes payable in the year for which the claim is filed. The tax bill should still be included with the claim. 4. There is no longer a zoning certificate required for claiming based on land covered by a certified farmland preservation zoning ordinance. For landowners who have an effective farmland preservation agreement, a copy of the signed agreement is still required to be attached to the claim. 5. All land on which a farmland preservation tax credit is claimed will need to be in compliance with state soil and water conservation standards. Beginning with tax year 2016, landowners will need to enter a Certificate of Compliance number on Schedule FCA in order to demonstrate compliance.
Beginning in 2017 for tax year 2016, landowners were asked to enter a unique 7-digit number on Schedule FCA in order to claim the Farmland Preservation Tax Credit. This is not required for landowners who claim using Tax Schedule FC. All landowners who claim the Farmland Preservation Tax Credit with Schedule FCA will need a Certificate of Compliance number. All landowners who claim under a Farmland Preservation zoning ordinance or landowners who have a farmland preservation agreement signed or modified after July 1, 2009 will need a certificate of compliance. Landowners should contact the Land Conservation Department in the county where their farm is located in order to obtain a certificate of compliance. Landowners may receive more than one certificate of compliance depending on how many farms they have an ownership interest in. Schedule FCA allows landowners to enter more than one certificate of compliance number if applicable.
This is a look at the first page of Schedule FCA. You should only file using Tax Schedule FCA if the claim is based on lands located in a farmland preservation zoning district or land covered by a farmland preservation agreement signed or modified after July 1, 2009, or a combination thereof. Question number 3 on FCA differs from question 3 on Form FC. On FCA, the question asks, do you have a certificate of compliance for each farm upon which this claim is based? Landowners claiming on Tax Schedule FCA must be able to provide a certificate of compliance number that corresponds to the certificate of compliance that was issued to them by their county land conservation department. If your client does not have a certificate of compliance, ask them to contact the county land conservation in the county where the farm is located.
In Step 1, on page 2 of Schedule FCA, you will be asked to list the certificate of compliance numbers on which the claim is based. This number is located on the Certificate of Compliance form issued by the County Land Conservation Department.
This is a sample of a certificate of compliance. See the top right corner for the certificate of compliance number. Certificates of compliance, again, are issued by the County Land Conservation Department in the county where the farm is located. The certificate of compliance demonstrates that the land is in compliance with the state soil and water conservation standards.
This is an example of the back page of a certificate of compliance. It will show the landowner's eligible acreage by parcel and category by which they are eligible to claim.
For clients that ask, what level of tax credit am I eligible for? Here's a quick explanation. The amount of tax credit available to eligible landowners who claim on Tax Schedule FC is calculated in a formula that is dependent on the claimant's income, as well as the amount of property taxes paid in the applicable tax year. The amount of tax credit available to eligible landowners who claim on Tax Schedule FCA is tiered based on how they participate in the program. Individuals who own land subject to an effective farmland preservation agreement signed or modified after July 1, 2009 may claim at a flat rate of $5 per acre. Individuals who own lands located in a certified farmland preservation zoning district may claim $7.50 per acre. Individuals who own lands located in a certified farmland preservation zoning district and are also subject to a farmland preservation agreement signed after July 1, 2009 may claim $10 per acre.
When filing, there are a few things that need to be attached to the claim. First, a copy of the Farmland Preservation Agreement, if applicable. Second, if the land was bought or sold during the taxable year, you must include a closing statement signed by the buyer and the seller and a deed or land contract. Third, you must provide documentation for percentage of ownership for the land on which the claim is based. If you're claiming on Schedule FCA, you may need to provide the following documentation. First, the property tax bills for the applicable tax year. Second, a copy of the certificate of compliance if it is the first year issued and or when a change of acreage is reflected on the certificate of compliance. In subsequent years, you will be able to list your certificate of compliance number on Schedule FCA.
A 2018 Farmland Preservation Credit claim must be filed no later than 4 years after the unextended due date of the 2018 tax return. For calendar year filers, this means that the 2018 Schedule FCA must be filed by April 15, 2023. Keep in mind, an individual's ability to backclaim the credit may depend on the County Land Conservation Department's ability to determine whether the land was in compliance for the previous years that the landowner wishes to claim for.
What are the main takeaways from this presentation? First ask, is my client eligible to claim the Farmland Preservation Tax Credit? Do they own land located in a certified farmland preservation zoning district or land that is covered by an effective farmland preservation agreement, or both? Second ask, am I using the correct forms to file on behalf of my client? Landowners with lands covered by effective pre-2009 agreements must file Tax Schedule FC. Landowners with lands covered in certified farmland preservation zoning district or covered by a farmland preservation agreement signed or modified after 2009 must claim using Tax Schedule FCA.
If you have additional questions or need some more information, please contact the Farmland Preservation Program at DATCAP Working Lands at wisconsin.gov or by calling 608-224-4621. You can also visit our webpage at farmlandpreservation.wi.gov. Thank you.